we're gonna go look back at this company. So it was Jesse from Opportunity Cost Investing asked me to look back at stocks, so I decided to do it. We're gonna look at the pros and cons of Planet 13, which I'm thinking about buying more of because it's been hyped up less lately, which is kind of good. Just letting it settle down a little bit. I thank Jeremy from Finance Education for that. So we're gonna look at the pros and cons. It's a fast-growing industry, which is very good. And the MJ space and the EV space are all fast-growing. Leader in cannabis, they have the biggest cannabis dispensary in the world. They have strong personal cannabis brands that sell fast. Like as soon as they put it on the shelf, it sells. What I mean by that is that their products are just so good, and it's actually building them a brand. It's making more of a brand awareness, which is really good in this space of products like this. You want to build trust, and that is associated with the brand. Really important. It also has great management that knows how to deal with the law to get this stuff legalized. Meaning, their top officials, most of them have some type of background in the law enforcement. Actually, the CEO, he was a law enforcement office. He had something to do in the law before this. So that was really good because now he knows how to get through all this legalization stuff, and this has high potential growth, and the company is growing pretty good financially. So it's just getting more profitable year after year, declining any less profitable years. It's a U.S. based business, more trust in the product, which is very important. Like with this MJ space, I think it's going to be very important in the future to have more trust because I think there's going to be a lot of scammers and a lot of bad news coming out about it later. And you're going to want to have a lot of trust. You want to have a good brand. And this company, all of its places are considered a local attraction, which is very beneficial for USA because that brings more people to USA. It just does a lot. So I'm going to tell you more. We need to look at the cons because if you're clicking off the video now, then you are not going to be successful because you need to look at the cons and the pros of every single company. So this has only 2 locations, which one of them just got a warrant to reopen. Okay, so it has proven some sales, but it only has 1 location. This location has brought in millions of dollars, growing more profitable year after year. It's just really cool. One of them, they just got a warrant to reopen, showing they are kind of good. They're really good with negotiating prices. Not negotiating prices, sorry. Negotiating to keep the MJ space alive and keeping their businesses, which is going to be very important when they're going to be expanding into more places. They need to know how to do that, and that brings back to the great management. They know how to do that. So this is a high risk, high reward stock. There's a lot of high risk and a lot of high reward for the stock. And it's also a hype stock. So when the hype stops, it will drop more because this mostly day traders. And that brings me to the next point, which is trading on the OTC market. So it's easier for day traders to access, and that brings me to the next point. The penny stock. It's a penny stock, so it's under $10. It has lots of volatility and lots of unproven investors, meaning these investors who invest in penny stocks or may just started learning about stocks like, oh my gosh, I learned about a stock. What is a stock? And then they just buy penny stocks because they see it's cheap. So that's not good. Just like in a private business, you want good investors, okay? That's what Warren Buffett is always talking about. He's like, I don't want to ever do a stock split because we don't want to attract those type of investors to our company, which is very important. So another thing Warren Buffett says is we require lots of, he didn't say this, they require lots of money to start a new location. Warren Buffett did say, however, that this is not good when you have to require so much money just to put up another location. And with a fast-growing industry like this, it's very not good. But in the long term, it'll pay off because this is a local attraction. And just like local attractions, you are going to have to pay a lot of money to start up a new location. But then it is an attraction. They're attracting lots of money and lots of new customers, which is good. So it'll pay off in the end. But these last 2 points are very concerning. So they must pay a lot of money to its workers, which is not good because this is going to be a reoccurring cost. When you buy a location, most of that money you're spending is not going to be reoccurring, whereas the workers, paying them is going to be reoccurring. They need to start negotiating the price down, and that is something I'm very worried about. Another thing I'm not very worried about, but worried about is their overvaluedness. So I do know that it's overvalued, but I love the stock. I think if you're asking me the prediction, I think $10 in 2023. Now, to be modest, what Jeremy from Financial Education thinks is $10 2025. I think $10 2023. He thinks $10 2025. But I'm pretty sure I'm pretty accurate. But to be modest, you're gonna have 3x your money in less than 4 years. Well, like 5 years. So that's pretty good. So tell you more. I don't really have more to tell you. This is just an update on what I already said. So overall, I think this stock is a buy because it's a buy because if you look at this, you looked at the list, you spent a day learning all about the company, you know exactly what the company is about. Now, all you have to do is make a list of all the pros and cons you learned about that business. And if at the end of the day, after you go through this list and you have this smiley face when you're thinking about the company, then it is a buy. Now, if you have rather a con face where it really just a sad face, then that's how you know it's not a buy. And it's pretty simple. Your first instinct is the right instinct. Well, when it comes to looking at the list after you did a day of research and then made a list about all the pros and cons, then if your first instinct after finishing this list, finishing that day research, then it is a con. But I would recommend you always watch a YouTube video before you ever go and buy a stock, even after you do this list. And never listen to analysts. It's cool to hear what they're saying, but don't make that change your decision on any investment you like. Okay? Thank you for watching, and I don't know why I'm talking like this, but anyways, bye.